Hey, good morning, everybody. Welcome to another day of Mark Park, brought to you by Mike Bjork. Today's Tuesday, November 24th. And again, this is kind of a short week this week. I will be out of town starting tomorrow. I hope you guys have a wonderful Thanksgiving time. Enjoy your time with your families and all the things that we're all appreciative. I appreciate you guys, and just want to say thank you. And I'll see you guys probably next week. The markets will be open. We'll get most of our data this week on tomorrow, and Friday there's no data on Friday, but it'll be a half-day market, so probably be a quiet day on Friday. But we'll kind of jump into what we have for today. We had the second revision of the GDP revision. The final should come out next month. So the previous reporting we had was at 1.5%. Forecast supposed to jump up to 2.2, and it came up to 2.1%. So pretty good movement. The second quarter was better than what we initially expected. Still down from what we had a final revision for a second quarter. But remember, the second quarter was kind of a push when we had basically no first quarter. So again, economy is kind of showing that it's going at a modest pace. Now I think people are kind of accepting, investors are kind of accepting that it could handle a rate hike in December. On the other note, we also got Case-Shiller home prices. This takes in the 20 largest cities in the U.S. So we had 5.1% back in August, year over year, pretty jump. And September, it jumped up to 5.5%. So good numbers right there. We even have a number of cities that are actually showing higher, they actually are peaking higher than the peak in 2006. So a lot of values have jumped up higher than what the last previous height of the market was. And last but not least, we got the consumer confidence for the month of November. We had 97.6 back in October. They thought it would actually grow a little bit, and actually it dipped. It dropped down to 90.4. So people are a little bit more hesitant than what they initially thought they were. Let's take a look here. Stock market's down today, and a lot of it, even though we had a mixed bag of economic news, it's mostly due to Turkey shooting down a Russian jet fighter near the Syrian border. Apparently, a jet wandered into Turkey airspace. They warned several times, according to reports, and apparently they weren't making any motion to leave the airspace and enter back into Syria. They shot it down. The pilots did parachute and ended up in the Syrian border into the Syria territory. So now basically it's the geopolitical concern, especially after the terrorist incidents this past weekend. It's just heightened up everything where what's going to happen next type of scenario. So the stock markets, the investors aren't liking it, make them a bit more jittery. So basically all indexes are down right now as a result. On the other hand, the bond market helps out the bond market a little bit. We're up about 3 basis points, even though you see a red there. It's up about 3 basis points from when we left off. Yesterday, we did have a nice little rally in the day, so we did show some improvement and did improve, have a positive for the day. And then today, we're kind of starting to make that a little bit happen as well. I do anticipate probably the same thing probably tomorrow, because mortgage-backed securities are a flight to safety with a long weekend going ahead, and especially with all the geopolitical concerns that have been going on with the terrorists, and now this with Turkey shooting down a Russian jet. A lot of times they'll pull money out of the stock market or equities and put it into a place for flight to safety. So I could see rates maybe having some improvement tomorrow, maybe possibly Friday, but especially tomorrow in the aftermath. Okay, folks, you guys have a wonderful, wonderful weekend. And again, I hope you guys have a safe and happy Thanksgiving. And we'll look forward to seeing you guys next week. Take care. Bye-bye.